as the S&P 500 is nearing all-time highs, is a black swan event threatening a stock market crash. Now we keep being told September is a bearish month, and historical stats actually back that up. However, this past September was not bearish, and we look at the fear and greed index, we are sitting at 68, well within greedy territory. Is a correction right around the corner? We're going to dive into that and a whole lot more in today's video. On Friday, we started to see some more cracks in the market. We come over and look at the volatility index. Notice the VIX closing near session highs. However, the VIX rallying up could still be nothing more than bigger players trying to hedge. Then we come over and look at the Dow Jones versus the transportation index. Now, we've had this trend line out here for quite a while on the transportation index, which is the chart on the bottom. We can see we're starting to break out while we've seen the Dow Jones making new all-time highs this week. We come over and look at the yield curve. We can still see the yield curve most certainly is now an inverted, and the yield curve has been inverted going back to the beginning of the month. Then as we come over and look at the SPY versus HYG, high yield bonds, notice what high yield bonds have been doing. They have been rocketing to the moon. And where do we see the S&P 500? Very, very close to all-time highs. So are we going to see another push to all-time highs? Or are we going to see a black swan event this week that could threaten the stock market rally? Now, with the Dow Jones making a new all-time high on Friday, you're probably saying, Mike, there's no way we're going to get a black swan event. Well, let's talk about one of the problems that we may be seeing up ahead. And that is going to be a port strike, could be an economic tsunami affecting these sectors. And think about this, right? We've already seen what happens when we get supply chain disruptions. Inflation goes through the moon, and even though Jay Powell keeps trying to sell us on the narrative that everything is fine, come on in, the water is warm, look at what the market is still priced in. We know the Fed cut rates by 50 basis points at the last meeting, and once again, the market is priced in another aggressive rate cut of 50 basis points, giving it a 53.3% probability that that's what the Fed's going to do at the next meeting. Now, if we look at moving forward, we can see the rate cuts just keep coming and coming and coming. And again, that is not a sign that we are on a very strong economic cycle. What this is letting me know is we are getting very, very close to the end. And if you don't believe me, look right here. BCA says a recession remains the most likely outcome. And again, with the yield curve being inverted for as long as it was, now we're starting to come out. Now they can maybe kick the can down the road for a little bit longer, but at some point it is going to take hold on the stock market and the economy as a whole. Now, we already looked at September. We know September normally is bearish. That just simply did not play out this year. Then I want to share with you guys some bullish stats real quick before we go ahead and jump into the charts. And this was one of the stats. I shared this in last week's video as well. Now, this goes back and shows that whenever the S&P 500 has made a new all-time high, or at least a 12-month high in the month of September, look at the returns that we get from October 27th to December 5th. We have been up 25 of those occurrences, only down 4. And even more importantly, look down here, 3% movers or more. Anytime we have moved 3% or more, when that has occurred, every single time it has been to the upside. So are we getting ready for another blow off top out here in this stock market? Or is this time different and maybe this stat isn't going to hold up? Now, here's another, pretty bullish stat as well. It's basically a 6-month trend. And what this stat basically looks at is you want to have a down month and then 5 consecutive up months in a row. And given the way September is shaping up, unless Monday is a horrible day, this stat could come into play. But I want you guys to take a look at something. As we move over here to the right-hand column of the chart, notice the stats, right? 1 month out, 3 month out, 6 month out, and 12 months out. 12 months out, we have been up 27 of those occurrences, only down 2. Even 6 months out, 24 times we have been up, 5 of them have been down. Even 1 month later, 22 times we have been up and only down 7 times. So this stat is also showing a little bit more favor towards the bulls. Then we go ahead and we look, and I want you guys to pay very close attention. This is during election cycles, but this happens all the time. The beginning of October, we tend to see a little bit of weakness, which we can see in these charts right over here. Then we normally will bottom out roughly the second week sometime in October and then go up. And with the markets being where they are, is this going to go ahead and hold true once again? And if we didn't have enough to worry about, we can see the conflicts over in the Middle East continue to rise once again. We see Israel going ahead and striking Hezbollah, and there's been rumors that Israel is starting to move tanks over into Lebanon. So that does not sound like tensions are starting to simmer. That could also pose a risk for the stock market at some point in the very near future. Now, if we look right here, it was a September to remember for stocks, but October presents fresh challenges for the rally. If we look at what those challenges are, we've already hit on some of them, but we have economic data, we have earnings, we have political uncertainty. Now I want to make you guys aware Apex 7 at 80% sale off all their valuation accounts, passed in as little as 1 day, and only $85 activation fee across all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now we come over and look at Nvidia. Nvidia was showing a little bit of strength last week. However, on Thursday and Friday, we did start to see a little bit of weakness. Now, with Nvidia, we have the potential for an ABC pattern all the way up to 132.99. However, if Nvidia starts trading back below 113.28, that would negate that upper pattern to the upside. We also come over, we take a look at Microsoft real quick. We see Microsoft starting to have some weakness as well. And notice that's after Microsoft already completed its ABC pattern, or at least got within a few ticks of that area. We come over and look at Meta. Over in Meta, we see a little bit of weakness as well. Then we look at stocks like SMCI. This week got beaten up a little bit with rumors about accounting problems and such. However, on Friday, it was able to shake it off a little bit and was able to gain roughly 4.31%. We come over real quick. We look at the dollar index. Dollar index making a fresh low on Friday, but when we look at the candle on the dollar on Friday, what do we see? We have a wick on the top. We have a wick on the bottom. So who really won? Nobody. That's a candle of indecision. And with that being said, we come over and we take a look at gold. What do we think is likely going to occur with gold? Gold's already completed multiple ABC patterns on the way up. Now we had that selling tail candle on the top of Thursday's candle. Then on Friday, we get confirmation with a bearish engulfing candle to the downside. Now, where would be the first downside target with gold? The first area I want to watch is going to be down here about 26.27. That's a prior swing point we have broken out from. We have failed to come back and test that price point at this moment. Now, I still think gold is likely going to go higher in the long run. However, I just think we're going to see a little bit of a short-term pullback. Now, if we do break below that swing point there, I would then look into this next structure level, which comes in about 25.70 down to about 25.60. Then we come over and we take a look at crude oil. Crude oil trying to get a little bit of a bounce on Friday. However, it's nothing more than an inside day. The low was higher than the prior day's low. The high was lower than the prior day's high. Now, what does that mean? That means we're likely going to get a breakout or breakdown from this pattern, and it could come as early as Monday. Now, if we do start to turn at least by the 78.6 fib level, then I am going to still be looking for that ABC pattern on the way up. However, if crude continues to go lower, breaking the 78.6 level, I look for then a retest of the lows. And if crude oil does start to have signs of weakness, that is also an indication of a weakening economy. Last week, we seen Micron coming out with earnings, having a large gap on the way up, kind of bolstering the Nasdaq out there on Thursday. However, are we going to start to see Micron potentially coming down and filling the gap? And let's not forget, we come over and look at the HSI, the Hang Seng Index. This is one of the largest short squeezes in the market at this current time. And I want you guys to pay attention just how dicey things can get when we get dead count bounces on the way up. We look at the HSI, we can currently see it went up 22% in a matter of 11 trading days. Massive moves on the upside. And why was that going up? All on the back of China providing more stimulus. Now, if the global economies are strong around the world, then why are we starting to see more stimulus, aggressive rate cuts? Again, we need to pay attention. Maybe tomorrow isn't going to be the day that everything falls apart, but at some point we will have a day of reckoning. Now we look out here on the diamonds, the Dow Jones, and notice we do have an ABC pattern that completes up here at about 430.21. We look at the candle structure on Friday. What do we see? We have a big selling tail on the top. So we ran up, made a new all-time high. We closed near the lower third of the range. Now the MACD indicator still looks strong at this moment, but I also want to dive down. I want to pay attention and see what does this look like on the weekly chart. On the weekly chart, keep in mind, we've been told September is very bearish. Here's the first week. We had a down week. We started off September on the right note in terms of for the bears, and then up and away. And Monday is going to be the last day. Keep in mind, the last day of the quarter, the last day of the month, there's likely going to be window dressing. They are going to do their best to try to prop the market up. When we dive down, we start looking at the 1 hour chart though. We can see we have 2 consecutive gaps. I'm going to dive down to a 30-minute chart real quick. We talked about this on Friday's live stream as well, that normally if the market gaps up 2 days back to back, I'm automatically looking for the market to come back and fill the gap. However, we did not quite get there on Friday. So does that mean that possibly Monday, we are going to see the Dow finally come down and fill that gap? Now, if you guys want to make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. Now, as we come over and look at the small caps, Russell 2000, starting off on the weekly chart, you can see last week we failed to make a new high, we failed to make a new low, and we basically closed with a hammer candle near the top end of the range. Now, one thing I want to caution you guys on if you guys are looking to go short would be the fact that we have this potential A to B equals C to D pattern. Now, that's going to complete at about 230.30. However, if we start to pull back a little bit, I wouldn't be concerned until we get back below 204.45. We break that, that would invalidate that ABC pattern on the way up. Then as we come over and we look at the daily chart, you can see we've seen quite a few red bars out here this past week. And then we look and we have a huge selling tail on the top of the candle from Friday with a very small candle body. Out here on the 1 hour chart, the MACD indicator is kind of by the zero line, and similar to the Dow, we have 2 days where we gapped up back to back. And then as we look at the 30-minute profiles, you can see we closed near the lower end of the range. Now, next week, I will be looking for at least one of these gaps to come back and get filled at about 218.81. Next week's going to be a big week in terms of economic data. We come over and look at Monday. We start off, we have Chicago PMI, and then Papa Powell will be taking the podium at 155. Then we go over and we look at on Tuesday, we have final manufacturing PMI. At 10 a.m., we have ISM manufacturing PMI, JOLTS job openings, so a little bit of job data right there. Then we also have ISM manufacturing index, construction spending. And then as we go over and we look at Wednesday, we have the ADP non-farm employment change coming out at 8:15. Then notice we have quite a few FOMC members speaking, along with crude oil inventory numbers coming in at 10:30. Then we come over and we look on Thursday, we have the weekly unemployment claims coming out, final services PMI, ISM services PMI. And then on Friday, oh boy, it may be a big one. We have the average hourly earnings, the non-farm employment change, along with the unemployment rate. Now they're calling for 144,000 new jobs. Let me know in the comment section down below. Do you guys think we're going to beat that number, or are we going to start to see signs of a weaker labor market? Now, as we come over and look at the QQQs real quick, we can see we're not that far away from all-time highs. We look on the weekly chart. We can also grab our Fibonacci extension tool. We can measure A to B equals C to D, gives us a price completion up here at about 510.33. That is just enough to get us above the all-time highs in the market. But hold up, wait, if we start to see a pullback, when is this pattern invalidated? That would be if we come all the way back down below 448.63. As we look at this on the daily chart, we can see that we had a little bit of weakness on Thursday and Friday. Then as we dive down to the 1 hour chart, notice the MACD indicator does have a bearish cross, trying to make its way down towards the zero line. And as we look at this on the 30-minute chart, what do we see? The MACD indicator is almost at the zero line. Not quite there yet. We still need to see it kind of go down there and kind of base out a little bit if it's going to give us a meaningful bounce out of this area. When we look at the profile shape, we have a B as in boy shaped profile. And one of the areas that we marked off in Friday morning's live stream, the first 30 minutes, we do the market analysis, was this minus development area. That's when the market was way up here. Look, we were able to take that area out. So now what I'm going to be looking for next week is on Monday, are we trading below value area low? If the answer is yes, I'm going to be looking for a retest of Friday's low. Then anything below that, we got to be open to the idea that maybe we're going to start to see a deeper correction, maybe all the way down here towards potentially filling the gap at about 471.32. There are some other targets that we can focus on. For instance, this little swing point right over here, about 483.95. Then the swing point between candle body to the candle wick, which comes in about 480.98 down to about 480.25. Then right down here towards this little zone right here at about 479.32 down towards 478.33. Now, as we come over and look at the futures markets real quick, we look at the Nasdaq. What do we see? Well, we can see we closed below value area highs. So we don't have a situation where we're closing outside of value. And we do have a point of control down here at 20,074 and a quarter. The value area low will be 20,000.35 and a quarter. And we have value area high up here at about 20,272.75. Now, if we can clear value area high on the way back up, I would want to target this distribution node on the weekly profile at about 20,345. Anything above that, I want to retarget these candle bodies at about 20,468 and then make a run towards a recent high in the market at about 20,535. However, let's not forget, we still have this untested value area high down here at 19,410 and a quarter. And at some point, we will come back and fill it. And we're going to have 3 consecutive untested point of controls on the weekly. The first one being down here at 18,928 and 3/4. The next one at 19,664 and 3/4. And then last week's untested point of control at 20,074.25. Now, when we start getting stacked untested point of controls, it increases the probabilities we are likely going to come back and test those price points. As we come over and look at the daily chart, notice we are closing near the lower end of the range, and we were able to take out that 20,184 untested point of control on Friday that we kept talking about during the live stream. Now, from a daily perspective, we did close below value area low, which comes in at a price point of 20,214.75. We have the point of control up here at about 20,252.25. And we have value area high up here at 20,322.25. Now, if we do start to bounce up, if we can clear the point of control on the way up, there is a little zone up here I would want to watch. And it's going to be a little minus development area, which really comes in anywhere from 20,271 to about 20,290. All right. So keep an eye on that level. The first time we come into it, I would expect the market to either consolidate or get a little reaction on the way back down. Second or third push into it, I expect that level to break. Now, as we come over, look at the SPY, we saw this week making another new all-time high. MACD indicator on the weekly chart looking a little bit weak at this moment. You can see prices continue to push up higher. MACD indicator is simply not confirming those new highs. And when we look at the candle body, relatively a smaller range than what we've seen over the past 3 weeks. Then out here on the daily chart, you can see a little bit of weakness over the last couple of days. MACD indicator giving us a little bit of divergence at the current levels. Then out here on the 1 hour chart, we're trying to make our way down towards the zero line. If we start to see more weakness this week, I will be focused on to see, can we come all the way down here, potentially filling the gap at 561.36. As we dive down, look at the profiles. If we start to get a bounce back up, I would want to focus on this minus development area on the profile. I'm going to go ahead and mark this off real quick. That's going to be anywhere from about 572.78 down here to about 572.60. Again, if we can get it back above the point of control, that would be a point of interest. But if we start breaking below value area low, then I would want to look for a retest of the lows from Friday. Then we can start picking off some of these other swing points to the downside and see if we can finally make our way down towards filling the gap. Now, one of the other targets before we fill the gap I would want to focus on would be the top of this candle body on the 30-minute chart at 564.93. Now, when we come over and look at the weekly profiles out here for the S&P futures markets, notice we kind of had a D as in dog shape profile. We're closing right near the point of control. However, this is going to be 3 consecutive untested point of controls at the open. We have the one down here at 55.38 and a quarter. We have the second one at 56.97.75. Then we have the one from this week at 57.90.75. Now, we're not that far away from this one, so a little bounce up could easily take that out. Now, with a D-shaped profile, we expect a breakout or breakdown from this pattern. And since we've had a very good push on the way up, I am favoring more of a push down. Now, what I wouldn't mind seeing at all would be a rocket ship on the way up, only to give it up, do a look above fail, and then start coming back down. Now, one of the areas I will be focused on will be this high volume area, aka the point of control as well. But before we get there, we do have a minus development area we're going to need to get through. Now, the first time we come into it, I expect the market to either a little bounce on the way back up or consolidate around that area. Now, that zone comes in anywhere from about 57.40 down here to about 57.36. Beyond that price point, I would then look for the target at 57.21, then down towards the point of control. But keep in mind, before we start looking at these lower targets, we must, either get below value area low or break value area high and then start coming back down below that price point. Out here on the daily profiles, notice we're closing right near value area low, which comes in at 57.86.00. We have the point of control at 57.97.50. with value area high being up here at 5808.50. Now, if we start to get a bounce and we start breaking the point of control, I do want to focus on this minus development area for a potential target to the upside. That would be about 5804 to about 5806. So keep that area marked off on your chart. If we stay below value area low, then obviously we're going to be looking for lower prices. Now, also on the 30-minute chart, we can make the case that we have an A to B equals C to D pattern. That would go something like this: the A to B leg, then we have the corrective leg for the B to C leg. We project down here for D. Now that gives us a price completion at 57.69. And again, we must stay below value area low in order for me to want to play that. If we start breaking on the way back up, then we could look to target these candle bodies for a quick little scalp on the way up to about 57.91, then point of control, and then that minus development area. We start breaking value area high, then I want to look for a retest near the highs out here from Friday. If we break that, why not go ahead and run and make another new all-time high? Now, if you guys would like to learn how to set up Quant Tower Nitro with fast track trading, make sure to watch this video right here.